Hello, traders. It's 8 a.m. Chicago time on Tuesday, August 12th, 2014. Thanks for joining me as always. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. The German August zoo expectations misses, comes in at 8.6 versus 17.0 consensus. Current situation 44.3 versus 54.0. That's a pretty bad miss. I looked at the DAX chart overnight. It looks like it had a small pop and then a sell-off about an hour later. Interesting reaction there. German economic minister says after strong Q1, growth in Q2 is expected to slow. Energy participants expect that despite tensions in Iraq, supplies will be unaffected. IEA reported that current oil demand is at its lowest level of growth since 2012. September Brent crude's trading at largest discount to October since early 2011. The discount 76 cents September to October. It's pretty big. IEA cuts oil demand growth for 2014 and 2015. There are reports that a Russian convoy, including 280 trucks with humanitarian aid, left Moscow for Ukraine. Putin's spokesperson says that the humanitarian convoy has been agreed with Ukraine. You might recall that both Merkel and Obama had warned Russia against making any further intervention in Ukraine, even through aid. Aid should go through the International Red Cross. In Iraq, former PM Maliki refused to step down. He's saying the president has violated the Constitution by naming a new prime minister. No one except me has the right to represent the state. We will fix this mistake. So this guy just sees himself as a dictator, I think, and it's creating further instability in Iraq. Big mess over there. Israel and Gaza reports that the three-day ceasefire, which started Sunday night, continues to hold. Looking ahead, today the calendar is pretty thin. 12 p.m. Central, 3-year note auction for $27 billion. 1 p.m. Central, the monthly budget statement expected at negative $100 billion. The week ahead, what's left? German CPI, UK ILO unemployment, the BOE quarterly inflation report, U.S. retail sales advance, U.S. crude oil, Fed's Dudley, Fed's Rosengren, and a 10-year auction for $24 billion. That's what's expected for tomorrow. Let's look at what the market did yesterday so we can have a better idea of where we're headed, what we're trying to do. So, and looking at what we did yesterday, this is yesterday's action here represented in a 2-tick Renko chart. The entire day is, it was a kind of a quiet day yesterday. Initially, the market opened, it had an open auction out of range. It had a two-way auction, so you could see here that both sides traded. The deltas on both sides of the zero line, and then sellers tried to take over. The expectation, my primary hypothesis yesterday, is that we would open, chop a little, and then I expected responsive selling to 28-ish, if not 26.75 area to find buyers, and then I expected the buyers to push back up to 33.50 to close the naked point of control, which was closed right at the open. And then for it to continue to 37.75, which you recall, 37.75 was the high, that was expected to be tagged here on Monday. 37, it got to 37.50, missed it by a tick, and then my next target up above 37.75 is the LVN at 42. It stopped at 41, and then the key area to test was at 1945. 1946 is key above. I'll show you in a minute in a different chart why that is. So what it ended up doing is it ended up testing lower, pushing through the opening swing high, pulling back right to the opening swing high to the tick to confirm it, chop, 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 and then finally make a run on a large rotation, 5.5 points to 41 even, and then it just could not go any further. Falls back into the initial balance, bounces off the mid a couple times, and then finally breaks through into the opening swing and becomes neutral. Neutral means the market trades both sides on both sides of the first hour's high and low. The first hour's high and low is marked by this yellow line called the initial balance. Neutral is when the market trades on one side and then trades on the other side. It shows inflection, or it shows a change in sentiment, sometimes depending on how the neutral closes. The troubling thing about this action yesterday is that once it goes neutral, it sits inside of the IB and it shifts the point of control down to 3250 on what looks like an awful low. This low looks incredibly weak to me. The expectation was for us to extend lower overnight and finally tag that 28, 26.75 area. The low overnight only got to about 30, 30 quarter. The profile itself just does not look very healthy to me. Let me stretch this out a little bit. It's just the way it tapers nicely on the top to show that participants became less and less interested as we pushed to 41, but the way this is bulky and it has a sort of a weird double distribution with a lot of volume right at the point of control, it just doesn't scream that the auction was orderly or complete. So the expectation the expectation overnight, having tested above and dropped to neutral late in the day with the point of control shifted to the low, is continued lower. Okay, so that's what we're getting right here. The market's trading right up against the overnight low. There it is. There's the break lower, and I'm looking for this to get down to 26.75 or so. 28 then 26.75. This action that's taking place right now was expected to take place overnight to extend this out, even out the profile. The overall quality of the profile or the trade or the auction are not that great right now. So the market's got something to figure out here, and it's trying to do it as we speak. Another thing to note, the point of control yesterday, as opposed to finishing up here where it spent most of its time at 36.25, therefore bringing our point of control higher into the balance zone, the point of control actually closed at 32.50, which was below the 33.50 that was put in last Monday, which is inside of the balance zone. So what this may be indicating is, instead of what I had anticipated yesterday and talked about on Day Trading Radio, as opposed to just breaking through the 37.75, pushing up, pulling back to the 37.33 area, and then finding a base to continue, this looks like it might fall back in and retest this 23 over the next couple of days. This is what's shaping up right now. It's just not able to carry value higher. We did have the gap up, but it just could not carry value through and take it and put it in a new high place within the MC. This to me is indicating that that it's likely to come back and build a better base to continue higher, if it's going to continue higher. If not, then we're looking at a pullback. Although we shouldn't have. We wouldn't have expected 37.50 to be retested again if the sellers were strong. If the sellers were strong, we wouldn't expect it to push through like that. So as of yesterday's trading and the way Friday closed, my expectation was for higher. 45, 46 is the next level up, and then 53 is the HVN in the area, and then we have a gap zone above. Speaking of the 45, So not only is it a thin area that was left behind last week, but it's also an area of a former high in the 47 area back here, 47.50. And if you draw a line across 47.45, you'll see that several times it's bouncing off this line. This is the key area I think that should be tested, that's likely to be tested before we decide whether to continue higher or not. Below, if we do not hold 23, the 2350 area here, which is the MC point of control, the micro composite, which is this box here, if we don't hold that price at 23, then the expectation is for a retest of 17 to find buyers down there if we can't find them any sooner. And that's the way things are shaping up today. Unless we get something that kind of squeezes the market lower with vigor, I expect it to test lower and then chop and fill in this area here, which is where we are, this LVN zone. The LVN zone we've left behind from last Monday. I expect it to chop between 23 and 31. I don't see the market going anywhere too far today. I don't think there's enough on the calendar to push either way, but we'll see how things shake out and what headlines come through. But I think the market will likely just sit in this area between 23 and 32 today. See what other notes I have for you. That's all I have, really. Not much more to elaborate on. Overall, the market's doing a good job of having tested 1900. Having tested 1900, it's done a good job of stabilizing and pushing higher into yesterday's range. It might spend a few more days here building a better looking composite. If you look at the composite in this area, this on the right side, this volume profile on the right side, you can see that it's fairly blunt. See how blunt that is? There's no consensus at these prices. There's nothing that clearly shows value. It's a lot of peaks and valleys, but it's mostly flat. So it may need to build. It may build a little bit more value before it has the energy to actually push through. I still think the push will happen to 46 before 1900 at the moment. That could change at any point this week depending on the action. So again today, looking for it to be stuck in between 23 and 33. I expect it to chop around in here today. There's not much incentive for this to move out of the way. Not seeing much on the calendar, and we'll keep an ear out for news. As always, follow me on Twitter, twitter.com/FuturesTrader71. If I hear anything on a news feed, I'll post it. And of course, those of you in the chat room get it right away since I post from the chat room into Twitter. So I'll catch you soon. Hopefully this was useful to you, and I'll talk to you. Take care.